on Meta's massive move. They are higher after reporting earnings and revenues that beat estimates, giving strong guidance. Julia.
Yeah, that's right. Metashare is shaking off concerns about growing CapEx with much better than expected first quarter revenue guidance. The company did guide to 2026 capital expenditures in a range of 115 to 135 billion versus the 110 billion consensus estimate. But CEO Mark Zuckerberg and CFO Susan Li are on the call explaining right now what that will buy them. Mark Zuckerberg saying AI will enable agentic shopping, increase the capabilities on WhatsApp, and improve content creation. Plus, we heard a lot throughout the call so far about AI improving internal development, enabling fewer employees to do more. Meta is also improving its core business, reporting a 6% increase in average price per ad, with increasing monetization efficiencies, as they put it. And some positive news for some of their newer businesses. Sales of their glasses more than tripled last year. They said Threads is seeing momentum and is expanding to more countries. They said paid messaging on WhatsApp now has a $2 billion run rate. Melissa?
All right, Julia, thank you. Julia Boorstin, again, the stock is up by about 9% here. There seemed to be a big overhang on Meta going into this report, concerns about CapEx, that CapEx and expenses were growing faster than revenue here.
Well, and the CapEx, by the way, grew faster than expectations, which tells you just how good these numbers were and just how good the guide was. And this is a growth company again, or maybe never wasn't.
And the guide was great, which people then will say, you know what, we're okay with the spend being between probably 125 and 130 billion dollars. And valuation, there's still a valuation component that is attractive here. And we said, I think last night collectively, that the setup for Facebook was, you walk in here, it's up $50 or so, and that's what's happening. The question is this good enough to get it through that 796 level that we saw the prior all-time high? And I think the answer is probably yes.
Yeah, you just mentioned WhatsApp, and this is, again, a platform that they've never really monetized, right? So if they're going to be charging businesses, right, to use this service, and they have, a couple billion, I think, monthly actives, that sort of thing, I mean, that does move the needle. I don't think Threads and the monetization there is probably going to move the needle. If you just go and think about what Twitter was doing in revenue, right, when they, were still public, I mean, I think it was like $5-6 billion or something like that. So at the end of the day, I think WhatsApp is probably the more important thing. And then you guys just outlined how are they using this technology internally to better serve ads. And that was a big part of the first leg of the story with Meta over the, I don't want to say 23, 24. I think that abated a little bit over the last 6 months because maybe they were kind of pushing on a string. And then investors were like, wait, they don't have a cloud business like the other hyperscalers. So maybe this is not the sort of name that they want to be involved in. And then kind of Google picked up the mantle at that point.
I mean, going into this quarter, there was a narrative. Is this going to be the quarter where a reduction in CapEx spending or flat CapEx spending would actually be rewarded as opposed to increasing? We flipped that on its head basically tonight with Meta's results. So what's your read through here?
In my opinion, I think Facebook wins this. And as long as their margins continue to improve, people will look fast to spend. Now, quarter by quarter, it's hard to say. I don't know why people were so exorcised the last time around, but now they're realizing actually this is a company along with Walmart that's figuring out how to use AI to their benefit.
I think this was a relief, and that's part of this reaction. But as we've talked about the characteristics of the stock and the behavior of the stock and the key levels, I mean, this stock was $580 on an intraday back in late November of 25, and is already now up to $730. The stocks have effectively done zero over the last 12 months, and I think these levels are going to be tough to get through. I think we're going to need to see that next level. This was a relief that, okay, op margins are okay. CapEx is somewhat a trade-off. I'm not sure the stock's ready to run that hard. It's not that cheap, even though I think they're world-class. And by the way, rest of the world, the growth, you think the U.S. stuff was good. Rest of the world, especially where WhatsApp, by the way, is where people use this thing, that which is going to grow 4 times. It was over 33% growth.
Yeah, by the way, outside of the U.S., the ARPU, the revenue per user, is so much worse outside the U.S. Let's just be really clear on that. And just going back to your FT piece, I mean, Facebook was actually Meta was one of the first of these major hyperscalers to do a creative deal to fund the expansion or the build out of the data center down in Louisiana. So that's one I think you got to put on your radar. And I can't wait until the next one. You're right, Mike.
I just don't think it's a coincidence that they're all off balance sheet debt.
Yeah.